Tell us what are the opportunities in Japan?
Well, again, I think you pointed it out. Those numbers speak for themselves. ETFs are growing as a global asset class that people are looking at. Here in Japan, that growth is even faster. But I think the real story is not just ETFs, but this is really the growth of passive investing more broadly. ETFs are clearly just a subset of that.
Does it matter the fact that the BOJ has been gobbling up the Japanese ETF market? Has that made a difference in the Japanese market?
Well, I think they're certainly the biggest buyer here in Japan. But I think that's just a local story. I think if you look at the growth of indexing globally, including here in Japan, that trend is far beyond just what the BOJ is able to do. I think for them, it's part of their quantitative easing program. But I think more broadly, investors are looking at these sort of products as a way of getting low cost and transparent exposure to markets.
Alex, I was wondering if you could give us an update on what we should expect when China A share inclusion gets added to your indices later on this year, in terms of what kind of weighting you're thinking of starting at and what kind of stocks might be included from the get-go.
So our governance committee has already announced their plans to phase in over 3 phases inclusion of the China A shares. I think it's really a testament to the opening up of the Chinese markets. Index providers like ourselves are really just trying to reflect what's the available opportunity for global investors. And as the governments in China open up more and more to foreign investors, you're going to see more inclusion of individual securities, and you'll see more and more products coming to market that'll give global investors the opportunity to invest in the China growth story.
Is there an openness to increasing the pace of how quickly those inclusions and the weighting inclusions happen, given the seeming success of the China inclusion story so far?
I think, again, the measured pace that we've announced, I can't imagine they're going to decide to change that. It's really a function of making sure that the markets continue to expand and access for foreign investors. You don't want to shock the system and disrupt markets. That's really not our role. Our role is to measure the market. So as access becomes easier for foreign investors, we're going to reflect that through our indices.
So, Alex, what are the big growth markets this year?
Well, I think the way we look at the world, it's really a much more of a strategic story of the growth of passive investing globally. Clearly, in terms of short-term performance drives markets, not so much what we do. So again, I think if you look around the globe, the rebound that we've seen since the end of last year has been quite positive, and I think you're seeing it now with the flows coming back into a lot of these sort of index products. I think when we look at it more from a geographic standpoint, the U.S. market continues to be quite strong. We don't make forecasts on future growth, but we're certainly happy to see the growth coming pretty much across the board.
Are we going to see consolidation in the ETF market? How many players really won't survive without merging, without being together and working together?
Yeah, I think that's something to be asked of really the ETF product providers. As our role as a licensor of these products, we certainly see that there are a lot of players out there, and you probably have a little bit too much in terms of product that's available. But again, I think the business models of the various product providers are really what's going to dictate how much consolidation will take place. I think if there's too much choice, sometimes it gets confusing for investors, and that's something that's not necessarily healthy.